So how's everybody doing today? Doing good? Everybody wide awake after probably staying up really late last night? Yeah, okay. My name's Vince Haworth, and I've been in the banking business for close to 20 years now. So I've seen all kinds of different ebbs and flows in the banking world, and this is probably one of my very favorite things I like to do is come out and see all our wide-eyed entrepreneurs out here and talk to you guys and try to answer some of those questions that you don't get in front of a banker very often, and when you do, it can be a little intimidating. Remember, I was a former business owner myself for 13 years. So I remember the very first time I went in to see my banker. It was a little nerve-wracking, to be honest with you. So fortunately, I had a really, really nice person. They were able to kind of guide me along. I didn't know what to do. I was just winging it. So fortunately, I had someone that was there to kind of mentor me along, and I try to bring that to my philosophy when I'm talking to potential clients and folks like yourself. So you guys want to be a business owner, right? Yep, that's why you're here. So this, I can tell you with all confidence, this is one of your very first steps. You're doing a great job for being here already. You're way ahead of most people. So I like to say this is kind of like a journey. When you're in the process of starting a business and you're going through all kinds of highs and lows. I see a little chuckling here. So does anybody know who these guys are? The old people here. I'm in that group. Journey, the group. So, but when you think about it, it really is a journey. When you're thinking about opening up a business, there's a lot of highs and lows. You've probably already experienced a lot of that already. A lot of people say, well, how long is it going to take to get my business going? Well, it kind of depends on what your business is, right? So if you're a service type business and you don't need a lot, you could probably get going pretty quickly. You're probably sitting there going, man, this is hard. This is a lot harder than what I thought it was going to be. Got this great idea. I'm ready to go. Everybody should be buying my product. And then you're like, well, this is a little bit harder. There's a little bit more than what I thought there was going to be. Then you find light at the end of the tunnel. You're open. And then the next question is, how do I stay in business? Because the odds are stacked against you, right? Businesses come and go all the time. So the one big component in that is, how do I get up financing, right? So at some point, you're probably going to need a bank to help you with their financing. There's all kinds of different options. And, Stephanie and John talked about some of the options. And it's getting better. I mean, heck, I've used Lending Club just on my personal side. So they had a great rate. It was easy. But at some point, you're probably going to need a bank to help you with down the road. And so what we're going to talk about today is, what does the bank require, local versus national, choosing the right bank, and how long is it going to take to get a loan decision? I think those are the main questions that people want to know, right? So during this time period, if you have a question, please make sure that you're asking. There's no forum, just blurt it out, and we'll talk about it. But one of the very first things I want to talk about is, what does the bank require? So we want pre-2008, not as much. Afterwards, we want everything. So we're going to go through all the different things that every bank's going to have their own application. So if you come to us, I'm going to say, well, here's our application that we need you to fill out. We're going to ask for a personal financial statement, personal tax returns. How many years do you think we need of your personal tax returns? Anyone take a guess?
3.
Yep, right on. Good job. We'll also need business tax returns or a business plan, financial projections, company documentation, and if you really want to wow me, bring in a paycheck stub, W-2s, bank investment statements. Anybody want to take a guess why I would ask for those? Silence. I'll give you a hint. Kind of like when you go into a doctor, they ask you all kinds of questions, right? Because they want to find out what's wrong with you. Well, kind of like me, I want to know everything about you so that way I can help try to get you that deal. Believe it or not, banks do want to make loans. That's how is our primary income source. So it's my job to find a way to get you that loan if you're qualified. So we ask you a lot of questions, we ask for a lot of things, but there's a reason behind that. Because at the end of the day, that's how banks make money, is they loan money off client deposits. So we ask you for a lot, but that's because we want to find out as much as we can about you to make the best decision possible. When you first start in banking, this is what we call the 5 C's of credit. So when you walk through my door, these are the things that I'm going to ask myself or ask of you. So I'm going to ask myself, John, how are you going to repay the loan? Are you going to look at just your business income? Or do you have some outside income from another source? Do you have a spouse? Maybe they're working that would help, if the business wasn't trending real good. Do you have some outside, investments that you get dividends from? So there could be all kinds of different reasons how you're going to repay the loan. So if you have a spouse, they're working, that just helps your case, right? Because you have additional monies coming in. How much will you need to invest? AKA skin in the game. So let's go back to 2008. Remember all those bad loans? Right. Guess how much skin in the game they had, for the most part. A lot of them were able just to walk away. So, shame on the banks. We were writing notes as fast as we could do it, right? Oh, you look good. Regardless of, you make, $1,000 a month, and okay, you can buy this $500,000 house. Sure. So in today's world, that's not the case. We're going to talk about how much skin you have to have in the game today. We're going to cover that probably in the SBA model. And then also collateral. So what assets will you pledge for the loan? So if you're a service business, you probably don't have a lot of collateral. But maybe if you're a restaurant, maybe you have some restaurant equipment. We're going to talk about the other reason why we ask for personal financial statements is there may be something on there that we might be able to use to help secure your loan. One of the great things about SBA is that's where SBA comes in, is we try to shore up a collateral shortfall. We're going to talk a little bit more in the SBA portion. Conditions. What is the economic climate in your industry? So we have no home builders. That's good. So go back to 2008 right now. So if a home builder came into my office and wanted a loan, how likely do you think that would have been? Not a good time to be a home builder. Now, that's pretty good. It's pretty good. It's kind of going. So if a home builder came in to see me right now, I wouldn't really have any issues with the economic climate, right? Character. So John hit on this with your personal credit history, and so did Rick. So what are your qualifications and credit history? So in the beginning, we're going to be looking at your personal history because the business doesn't have anything to show yet, right? And then I would say the qualifications. That's a huge deal. When I'm looking through, let's see, who can I pick on today? Let's see. Sylvie? Okay, did I pronounce that right? Yes. Okay. So tell me a little bit about textile design. What you're going to do and what's your background?
I have no idea what I will do actually right now. But textile design is a very complicated industry because if you do it by your own, like handcrafting, it's very expensive.
Okay.
So you need, it's a expensive business.
Okay.
If you go to China, of course, and they do 1 million different fabrics for nothing, it's inexpensive. But in my case,
Okay.
I look for an expensive type of textile.
Okay. And so what's your background?
I am textile designer.
There we go. I think we've got some industry experience. That's kind of where that'd be one of the very things I would first ask. So, like right around 2009, all the poor Sprint people were getting laid off. I can't tell you how many of them came into my office, and they were all going to start up coffee shops. Every one of them. That'd be because they all got these big lump sum payouts, right? They were going to go into business for themselves. I don't blame them. But the very first thing I would ask them is, so tell me about your experience level in the have you worked in a coffee shop? What's your background? Have you managed people? No? No? Well, I'd suggest probably going to work for Starbucks for a little bit. Or, get some industry experience, because the banks are going to look at that. They want to know when you step into that business that you're able to go ahead and run that business, right? Kind of makes sense, but that's a really big deal. Now, the good thing is franchises, there's a lot of ready-made, they can take someone and they can train you because they already have a model set up. So franchises are kind of a good way to, maybe you don't have direct industry experience, but they can train you for that. Any questions so far? No? Okay. Your business plan. So this is probably one of your most important steps, and we're going to talk about the reason why. Educating the lender about your business is probably the most important step when it comes to getting a business loan. So describing your background and qualifications, we kind of talked a little bit about that. You're going to have project, budget sources of use of funds, cost quotes, detailed bids. But really what I want to focus on is why do you have to educate the lender about your business? Who wants to take a stab?
To make them feel comfortable.
Yeah, that's part of it. Who else?
Shows them that you've done your due diligence, that you're involved in the plan, you've got a plan of action, you know where you're going. It's not just a kind of nebulous, I want to start this new business thing.
Yep. I would concur with both of those. Any other reasons why?
It's not their job to know about your business. I mean, it's not, they didn't have to do the due diligence. You're educating them.
Yeah, that's another good reason. Anybody else? I like your responses so far. Well, I would say one of the biggest reasons is because if the lender doesn't know about your business, and talk about the approval process for a loan. So my job is to go into a loan committee of 8 people who don't know who you are. So it's my job to convince them that you're a qualified person for this loan. So if the lender doesn't know anything about your business, what do you think the possibilities are that you're going to get approved? It's a tough go, right? We're going to go back to the local versus national banks because we had it in there. So they both have their good things, right? Local banks, a lot of times will have people here in the Kansas City area. Sometimes with national banks, where's their credit decisions being made? Could be in California, could be in New York. Do they know Kansas City and what's going on here? Not always the case. Now, I'm not saying everybody should be with the local banks. Sometimes it may make sense for them to be with the national bank. But the most important thing you guys can do is pick the bank that's right for you. So when you're out there, interview the banker. Because if they don't believe in your business, or if they can't explain what you're doing, then you need to get rid of them. Because they have your future in your hands, right? It is one of the most important things you're going to do. If someone came to me and they wanted an agriculture loan, I can't do that. I'm going to try to refer them to someone who can do agriculture lending. I wouldn't be able to understand that. So when you look at your business, think about the bank. It's your guys' future. It's really important that you pick the right bank, and I will tell you, pick the right banker. Because they may have been in banking 20 years, but if they don't know what they're doing, it doesn't mean much, right? Just because they have experience doesn't always tell the whole story. Questions so far? You guys are like, ugh. There's more on the business plan. So there's demographic and competitive analysis, 2 years of monthly income and expense projections, 3 years of annual projections. If you're doing a franchise, we need some of that information. And then if you're purchasing, you need a buy-sell agreement. So there's a lot to it, right? The good thing is they do a fantastic job here to help you with those things. So this is just a real kind of basic sources and uses of funds. So if we're going to give you $225,000, we kind of want to know where our money is going, right? So Julia, we're not going to give you just a blank check of $225,000, right? We want to know where the money is going. So there's more to it than this, but this kind of gives you a rough idea of how it works. So let's talk about SBA. So most of you guys are in here. Your very first loan more than likely is going to be an SBA loan because you don't have the history. And so what the SBA does, I'm going to talk to you a little bit about the program and how it works. The very first thing when you're out there and you're talking to that banker or banks or whoever, one of the very first things I would do is, are you a preferred lender with SBA? Does anybody have an idea of why you would want to ask that or what that means?
Would it define the type of loans that they normally do?
Close. Like where you're going.
So it's kind of like you wouldn't go to a bank that deals only with large international corporations to start a small coffee shop in your hometown.
Well, that has something to do with it too.
Okay.
Yep. So the preferred lender status means that the SBA is comfortable with that bank and they've done enough business with the SBA that they have preferred status. So what that means to you is that the preferred status gives you a leg up. They've done SBA. They understand the program. And more than likely, it can be a lot quicker process, an easier process for you. So when you're doing your first commercial loan, that would be the very first thing, because more than likely, you guys are going to be SBA. It's going to be an SBA loan. So when you're out there interviewing the bank and the banker, I would ask that question. And then my follow-up question would be, well, just because you're an SBA preferred lender doesn't mean you're familiar with SBA. So there's a lot of bankers out there that work for SBA preferred banks, but they have never originated an SBA loan. And they don't have any experience in it. Couldn't tell you the difference between a 7A or an express loan. So those are the questions that I would ask of them.
So you're saying the bank has this preferred lender status, but the individuals within that may or may not have worked with SBA loans?
Absolutely.
Okay.
So some of our larger national banks have an SBA area, so they'll source an SBA loan and they'll hand you off. Good question. They may not have any experience in SBA. It's a great question. The SBA program helps mitigate risk, and we're going to talk about how that works. Extends amortization which is one of my favorite parts of it. So in SBA world, we can go up to 10 years on a loan. So if you're asking for a $100,000 loan and you're given the option of doing a 10-year loan as opposed to a 5-year loan, how does that help you? Incredibly. So it makes that payment a lot more manageable, especially in those first few years when you're trying to get your business established, right? A lot of times there's no prepayment penalty, so the longer amortization doesn't hurt you. So,
Is that like a construction loan? When you wanna build a house, you can get a construction loan if you're gonna build it yourself?
there is some draw processes involved in SBA depending on, if you have like a retail and you have a build out on it, there is some draws in there that you can do. That's a little bit of that's where I would talk to your banker and talk to him about that kind of thing. But yeah, you can do that. So there is some parts of that. Good question. Typically a 15% injection is what we ask for. The more you put in, the better. Of course, not everybody's going to do it, but I would say typically a 15, I would suggest 20. That's always my suggestion. 15's kind of on the low end. We might ask for additional collateral. So the SBA requires us to take all collateral that we can when we originate a loan, because the likelihood of a deal may go bad. So they want as much protection as we can. So what might be something that we might ask for? Additional collateral. You're exactly right. Yeah, that is one thing about the SBA program. It does require, if you have a certain amount of equity within your house, you may have to put a second on your home. That's the SBA program. So that's one thing that people, they get a little, hey, I would too, right? But that's part of the program. That's one thing that gives people heartburn. Now, sometimes you can get that released after a certain amount of time if the business performs, but that goes back to the skin in the game part. John?
What about IRA funds
Those aren't able to be used.
across the board?
Yeah, as far as I know. Unless anything's changed, you should not be able to use those. Any kind of retirement programs you want, we can't use. So, now if you don't have a home, can't take it. I think somebody in our class one time says, what if I sell my home before I get the loan? Well, can't do anything to stop you, right? So we do have some military veteran programs available. We love those. Those are fantastic loans to make. It's probably one of my favorite ones. There's a little bit more paperwork involved. The rate's a little bit higher than a traditional conventional loan. So I told you guys 6 1/4 earlier, right? So a typical conventional loan may be at 5%. It all varies. There's no set rates. Typically, those are the rates that are kind of out there right now. It's a little bit longer, and there is SBA fees involved. So right now, you can get in under $150,000 with no SBA fees, but that was a government program that's going to expire. Hopefully, they'll extend. But that's not something that the bank takes. That's something that the SBA requires. It's kind of like your PMI insurance. Who's got PMI insurance on their home? One? Okay, wow. Okay, usually there's more. So you have to pay that PMI. It goes into basically it goes into an escrow account. So what happens if a loan goes bad? They take those fees, and then that's where the government pays out a bad loan back to the bank.
Isn't it after 20% you don't have to pay PMI anymore? After you own 20% equity in your house?
Yeah, it's mortgage. I don't know about that, but I believe that's the case. So, we'll talk about. Oops. Oh, I go back a little bit and talk about. So, if we have a $100,000 loan, you come to me, let's talk about the guarantee part. So, Vince, I need $100,000. And you come to me and you have $20,000 to put in for your equity. So, we're looking at a 7A SBA loan, and we have a guarantee of 85%. So, do the math. How does that look for the bank? Pretty good, right? So we're in a pretty good position. So, Zachary, we like your experience. You're bringing $20,000 to the table. We have an 85% guarantee. You have a great business plan. You have industry experience. And we have a guarantee. Think we may have something here, right? So that's where the SBA program comes in, because the bank reduces their risk. So then the next question everybody asks, well, why don't you do all the loans? Well, just because we have an SBA guarantee doesn't make a loan approved. So what happens when we're talking about preferred lender status? What happens if we go back to the SBA because we have so many loans going bad? Do they like giving you back money? No. And so what they're going to do is they're going to pull our preferred lender status, and we're going to be at a significant competitive disadvantage afterwards. So do we like SBA? Absolutely, because a lot of loans, a lot of businesses wouldn't be operating today without it, but it doesn't mean a guaranteed approval. But it sure is a nice program. Any questions so far?
What kind of percentage defaults do you see in the program?
It's, well, typically I saw the last one, it was about 3%. That's a good question. Yeah, it was about 3% on startups, if I remember correctly. So not bad. Yeah, not bad. Yeah, but the banks really do like this. A lot of them are starting to use it more and more because they see the value in it, especially after the decline, the economic downturn. A lot of them are using it. So it's a good program.
When you talk about throwing out kind of this 6.25%, does your bank kind of say that's what we do SBA loans for if you're approved, or is that going to fluctuate based on the individual's credit rating and ability? So you may get a higher or lower percentage, or is it?
We typically, that's a great question. We typically will keep it at the same. So if the because there's a little bit more risk with SBA. The rate's going to be a little bit higher. We typically will tie that to Wall Street Prime. So it'll be most SBA lenders will be with a variable rate. Great question. That's a fantastic question. We'll kind of go over this a little bit. Stephanie did a fantastic job of kind of talking about some of the other types of financing available. So just some tips and advice for you from my guru guy there. Surround yourself with a good team. You're already doing that by being here. I'm telling you, these guys are fantastic. They do a great job. Work with them all the time. There's also a lot of different organizations throughout Kansas City, networking groups, and Kaufman, Fast Track. I mean, there are just so many things that are available to you. As John and Stephanie talked, keep your business and personal credit. Try to keep those in good shape. It really does affect you quite a bit. Don't show up on your overdraft list if you're in a small town. You're always overdrafting your account. It's a likelihood you're going to get a loan. You're always on the overdraft. Make your payments on time. Use the resources available to you. Stephanie talked about the line of credit too. So I'm going to wrap it up here. So I know you guys are probably hungry. Any questions so far? I'll be hanging around to answer any kind of questions offline. But anybody have any questions? No? I can see the glazed look in your eyes. Okay. Thank you very much. And there's my contact information. Like Rick said, I will not solicitate business or anything, but I'm available as a resource for you. I take phone calls, emails all the time from people. just asking various questions. I'm more than happy to do so. So good luck, and let's get you into business, right? Okay. All right.